Welcome back. You're here with us on NDTV Profit. Let's see how the markets are doing. So Nifty continues to be flat. Nothing much has happened, at least in the last couple of minutes or so. But the good point, of course, is that it's still holding above that level of 8100. Sensex 2 is also lower by 200 odd points as we speak right now. European markets have also opened. Let's see how they have opened. So there is some bit of weakness that we are seeing in the European markets as well. FTSE 100 lower by about 0.20 odd percent, and their CAC 40 there on your screen is absolutely flat right now. So let's focus on what's happening in the various companies out here. We are talking about Symphony today. The stock is seeing some bit of selling pressure. We have the management now joining us to talk about the business outlook. Mr. Nrupesh Shah, Executive Director at Symphony Limited. Thank you very much, Mr. Shah, for joining us here on NDTV Profit. Tell us how exactly was the second quarter for the company in terms of the demand scenario that you have seen. We've been speaking to a lot of companies, and there is now greater clarity that the rural demand particularly has remained quite weak in the second quarter. What was the sense as far as Symphony is concerned?
June end is our year end, so September quarter is going to be our Q1, and we will come out with our quarterly result in few weeks, in fact before end of the month. So for the first quarter or year, certainly we will be happy to share the information once we announce the result. But to talk about the industry and future prospects, industry as a whole, air cooling industry is growing at a CAGR growth of about 12 to 15%, and organized sector even at a higher growth. So last year the air cooling industry size was 7 million units, which in next couple of years, by 2020, we expect it to grow to about 10 million units in domestic market.
Right. What is the current capacity utilization that you're seeing at this point in time that you're operating with?
We are having outsourced business model. So we are having 9 outsourced manufacturing facilities, and hence capacity utilization is not much of the issue, because depending upon the additional models or additional demand, we are in a position to add more OEMs. But having said that, the existing capacity of our OEMs is close to 1.20 million units, so we have adequate capacity, and this is over and above our 2 SEZ facilities, one at Kandla and second is at Surat. Both put together, the capacity is 300,000 units, which is also adequate to take care of our international business, because those SEZs primarily are meant for exports.
Right. You recently acquired a Chinese company. Can you tell us how much did you pay for this acquisition, and what is the strategy for this acquisition of a Chinese company? Will it only be for exports in the ASEAN region? Could you get these products in India as well?
So the Chinese branded air cooling company, which we acquired recently, it's almost 15 years old air cooling company. Its 50% business is domestic and 50% is overseas. That company is having almost 80 IP rights, including 51 patents. It's having state-of-the-art R&D facility meeting with American and Australian standard, and only of its kind R&D facility in whole of Asia in air cooling industry. And it's a known Chinese brand overseas in respect of air cooling industry. And as it is known from India, we need to approach the world to export our product, while globally the customers approach to China for sourcing the product. So it should help us in the medium to long term to have better international presence. And on top of it, China is having, especially with Southeast Asian countries, special tax treaties. So that should also be helpful in that respect. As far as the consideration is concerned, it was a very small consideration, because the Swedish promoter were keen that if this company is acquired by Symphony, which in turn can turn it around and take it to a new level. So it has been just about 15 million rupees.
All right. So the consideration is not high, but I wanted to understand, is this company in stress? Is it going to be helping your margins? What kind of revenue uptick are you expecting post this acquisition?
Sure. So current year, its expected turnover is going to be about 56 CR, and at a PAT level, it's likely to be negative year as a whole. So we expect it to turn around in medium to long term, and as per our estimating medium to long term, one, to take care of its working capital need and also to fund its losses, we may have to invest or pump in about 15 CR to 35 CR.
Okay, so I mean, is that what's your total capex plan then for FY16, and how much of it is done? How much of it will you be doing in the remaining half of the year?
Of course, for the year we can talk once we declare our quarterly result in next few weeks. But as per Symphony's business model, we are having a low capex, almost negative working capital cycle on account of outsourced business model. So we have always capex in very negligible capex, mainly in the form of molds and dies and some other assets, and that's likely to continue.
Give us a sense of, how has been the export business and what are you expecting? Because we're talking about a demand slowdown across, especially the concerns that have been raised about China as well. So what's the situation as per the division that you operate in?
Of course, our current exports from India, we don't have any exports from India to China currently. So about Chinese slowdown also is not going to be impacted in that respect. As far as our competition with Chinese air cooling companies in respect of exports from India, I think our whole business model is such we are easily in a position to compete with the Chinese players. And rest of India, rest of China, the overseas estimated market size is in the range of 5 to 7 million units. And we have in that respect barely scratched the surface. So in medium to long term, we expect overseas market really to contribute substantially. And in addition to that, acquisition of China also in a medium to long term should help us in that respect.
Right. I just want one last question, Mr. Shah, on the margin outlook. You mentioned that you have paid a small consideration for this Chinese company, but you will have to pump in some money to turn it around. Will it drain your margins? Because you're in the branded business, and the branded business, of course, has better margins. The competition is intense. Going ahead, will there be dilution to your margins?
As far as our domestic business is concerned, we expect our margin to remain intact. As far as pumping in the funds in Chinese company, which is, as I said, just about 15 to 35 CR versus our treasury as on 38 June 15 is approx 250 CR. So that pumping in the funds vis-a-vis our treasury itself is negligible. And on top of it, as we have announced earlier from IMCO Mexico, we are in fact monetizing some of the assets. So in fact, whatever asset monetization is taking place in IMCO should easily take care whatever funds we have to pump in China.
All right. Thank you so much, Mr. Shah, for speaking with us at NDTV Profit, giving us more details of the outlook for Symphony. They have bought out these Chinese companies, and they are bullish on exports as well. That's Symphony for you, flat at this point in time. We'll slip into a break. When we come back, we will have more on the markets that seem to be in the recovery mode. Plus, we'll speak with the management of Manipura about the new orders that they've backed. Stay with us.